Real estate boom or bust. Today's episode is one that you won't want to miss. We're diving deep into the concept of the real estate boom or bust and how it's going to significantly affect the 2025 economy, particularly in terms of tariffs, stocks, financial systems, and the financial standing of ordinary people. Trust me, understanding these dynamics could be the key to securing your financial future in the next few years. We'll explore the benefits and challenges of investing in real estate, the shifting economic landscape, and how you can navigate these changes to maximize your wealth. Hello, WealthRise listeners. I want to take a moment to thank each and every one of you for your continued support. Your likes, shares, and subscriptions make a huge difference, and I'm incredibly grateful to be part of your wealth-building journey. If you haven't already, don't forget to hit that like button, share with your friends, and subscribe so you won't miss any of our upcoming episodes packed with valuable insights. Could the real estate market go through a dramatic shift in 2025, with some markets booming while others see a sharp downturn? And more importantly, how will tariffs, inflation, and changes in the financial systems impact your wealth and financial freedom? Let's find out. The 2025 economy. Understanding the shifting landscape. As we look ahead to 2025, we find ourselves in an economy shaped by global and domestic shifts. While we are emerging from the economic challenges of the past few years, the future is anything but predictable. Factors like trade tariffs, inflationary pressures, and technological advancements will continue to mold the economic landscape. And at the center of this change is the real estate market, which stands at a crossroads. Will it boom or will it bust? In this uncertain climate, it's crucial to understand how global events and government policies are impacting real estate, the stock market, and financial systems. We're seeing increased uncertainty in the markets, but at the same time, there are opportunities for those who know how to navigate these waters. Tariffs and their economic impact. One of the significant drivers of change in 2025 will be the ongoing trade tensions and the impact of tariffs. Trade tariffs are taxes imposed on imported goods, and they can raise the price of foreign products, shifting the economic balance. The United States, for instance, has had tariffs in place on Chinese imports, and other countries have followed suit. These tariffs can impact the cost of construction materials, raw materials, and labor, all of which directly affect real estate markets. The tariff impact on real estate could be twofold. 1. Increased construction costs. When tariffs are imposed on building materials like steel, lumber, and concrete, construction costs tend to rise. This could drive up the price of new homes, making real estate less affordable for both buyers and renters. In the short term, this might result in slower growth in some real estate markets, especially where construction is reliant on imported goods. Number 2. Market displacement. Tariffs and trade wars can also lead to shifting market dynamics. In regions where trade and import-heavy industries are concentrated, we may see a slowdown in job growth, which can impact demand for housing. On the flip side, areas that are less reliant on international trade may see stronger demand for housing, potentially leading to price growth in those markets. The tariff impacts on global trade will inevitably affect the supply chain, and these changes will be felt across industries, real estate being no exception. Understanding these shifts will be critical for real estate investors to avoid costly mistakes and capitalize on emerging opportunities. Stocks in the 2025 economy, growth or slowdown. Now that we've explored the impact of tariffs on real estate, let's shift our focus to stocks. As the economy continues to evolve in 2025, the stock market is likely to face significant challenges and opportunities. The tariff-driven inflation could lead to a complex investment landscape, which will impact everything from tech stocks to real estate investment trusts, REITs. Benefits of stocks in 2025. 1. Growth potential. Despite the volatility, stocks remain an essential tool for growing wealth in the 2025 economy. For instance, companies in emerging industries such as renewable energy, electric vehicles, and artificial intelligence may continue to see growth, even in times of economic uncertainty. 2. Higher returns. Historically, stocks have provided returns higher than those of real estate, though they come with greater risk. For investors willing to weather market fluctuations, stocks remain a viable vehicle for building wealth in the medium to long term. 3. Diversification. While real estate is a great asset, stocks allow for better diversification across industries, sectors, and even countries. As the global economic landscape shifts, stocks provide an opportunity to spread risk and potentially capture growth in markets not directly impacted by tariffs. Disadvantages of stocks in 2025. 1. Increased volatility. The tariff impacts and the uncertainty around global trade and inflation mean stocks are likely to remain volatile. Investors in the stock market will need to brace for sharp fluctuations in stock prices, particularly in sectors sensitive to international trade. Number 2. Inflation risks. As inflation rises, companies that rely on global supply chains for materials may see shrinking profit margins, leading to weaker stock performance. If the Federal Reserve increases interest rates to combat inflation, stocks, especially growth stocks, may experience downward pressure. 3. Slower economic growth. If the tariff situation continues to escalate, global economic growth may slow down, which could lead to reduced corporate profits and further pressure on stock prices. For long-term investors, this could mean a prolonged period of lower returns. In summary, the 2025 economy could present a challenging environment for stocks, but there will still be opportunities for growth if investors are strategic and adaptable. Impact on wealth and financial systems. Now let's take a step back and look at the bigger picture. What does the real estate market, stock market, and tariffs mean for wealth creation, and how do these dynamics affect the financial systems and the ecosystem of wealth? Wealth inequality and economic displacement. One of the most important things to consider is how all of these factors will affect the wealth gap in 2025. As construction costs rise, homeownership may become even more out of reach for many people, especially first-time buyers. This will exacerbate the wealth inequality that already exists, as homeownership is one of the most common ways people build wealth. For those in the upper income brackets, the real estate boom could provide substantial opportunities to capitalize on rising home prices. However, for many others, particularly those without sufficient access to capital, this may result in economic displacement. If home prices outpace income growth, the gap between the wealthy and the ordinary person will continue to widen, making it more difficult to achieve financial independence. Additionally, the financial systems themselves are changing. We are seeing a greater push toward digital currencies and blockchain technology, both of which have the potential to change how wealth is stored, transferred, and created. However, these innovations come with their own set of risks, including concerns about security, regulation, and the overall stability of these new financial systems. As tariffs, inflation, and other pressures continue to impact the global economy, these new systems could become more important, especially for individuals who may no longer have access to traditional banking systems. The impact on ordinary people's financial standing. When we talk about the ordinary person's financial standing, we're looking at how tariffs, inflation, and the shifting economy affect the day-to-day financial lives of the average person. In 2025, these pressures are likely to manifest in several key areas. 1. Higher living costs. As tariffs drive up prices on everything from imported goods to materials used in construction, ordinary people will likely face higher living costs. This means paying more for everyday goods, rent, and possibly mortgages. The housing crisis could deepen, making it harder for many to buy homes, let alone rent at an affordable price. As inflation continues to rise, the purchasing power of the average consumer will decline, and many may struggle to maintain their standard of living. 2. Employment and job security. The shifting economic landscape may also affect job security. Industries that are heavily dependent on imports may face disruptions, layoffs, or slower growth. For individuals working in these sectors, this could mean job loss or reduced hours. At the same time, certain sectors, like technology, renewable energy, and healthcare, could continue to grow, offering opportunities for job seekers in these fields. 3. Reduced wealth-building opportunities. For most people, real estate is the primary vehicle for building wealth. If the cost of housing rises sharply due to tariff impacts and inflation, it could push homeownership further out of reach for many. Without the ability to purchase property or invest in real estate, people may struggle to build wealth the way previous generations did. Conclusion: real estate boom or bust. So, will real estate boom or bust in 2025? The answer isn't straightforward. With the economic factors at play, including tariffs, inflation, and shifting financial systems, we're likely to see a mixed bag. Some markets will continue to see growth, while others may face corrections. For ordinary people, the road ahead could be filled with challenges, but also opportunities for those who adapt to the changing economic landscape. As a listener of WealthRise, you now have the tools to navigate these challenges and position yourself for long-term wealth and financial freedom. Stay informed, stay adaptable, and continue building your financial knowledge. As always, thank you for listening, and don't forget to like, share, and subscribe for more insights on how to thrive in today's economy.